Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hi, this is Beau Eckstein with Emerge Lending Group, and today we're going to talk about USDA Business and Industry Loans, Guaranteed Loan Program. So what does this program do? This program bolsters the availability of private capital by guaranteeing loans for rural businesses. And then who may apply for this type of funding? You got for-profit businesses, nonprofits, cooperatives, federally recognized tribes, public bodies, and individuals as well. And this program is really designed for rural America. We're talking about any area other than a city or town with a population of greater than 50,000 inhabitants and the urbanized area of that city or town. The borrower's headquarters may be based within a larger city as long as the project is located in an eligible rural area. And typically the lender could be anywhere and can lend in any state, but it also depends on the jurisdiction of that particular lender. You're dealing with state and federal chartered banks, savings and loans, farm credit banks, credit unions, and private funds that offer these business and industry guaranteed loans through the USDA. How may funds be used? Business conversion, enlargement, repair, modernization or development, purchase and development of land, easements, right-of-way, buildings or facilities, purchase of equipment, leasehold improvements, machinery, supplies or inventory, debt refinancing, when refinancing improves cash flow and creates or saves jobs, business and industrial acquisitions with when the loan will create or save jobs. And then what can't these funds be used for? Line of credit, owner-occupied housing, golf courses, racetracks, or gambling facilities, churches, fraternal organizations, agricultural production with certain exceptions. So let's dig into it a little bit more here. So this is what it looks like as far as USDA business and industry loans. This year, actually in 2006, we're not updated here. You know, they did a little bit less than, actually they did 1 billion. I think we're about 1 billion in 2019 as well. So it's not a huge program, but it really fits the needs of small town America. And this could be for funding many different businesses, just the business aspect of it, equipment and or real property like commercial property. In our next slide, here's a breakdown. So they show in 2019 kind of the breakdown of what product or loan types were made. So you can see the majority is accommodation and food service, hospitality and food service. And then real estate and rental listings was about 14%. And there's manufacturing, there's arts and entertainment, there's wholesale, there's construction, healthcare. So it's a good mix of different, business types that can be funded. USDA B&I is similar to SBA. There's some differences. We can go as high as 25 million on this loan versus a $5 million SBA 7A, for example. The other big difference is we can do up to a 30-year term. If it's real estate asset related for equipment and things, it's a little bit shorter amortization. There are prepayment penalties on both these types of asset classes, loan types, USDA and SBA. The really nice thing about USDA is what it does is USDA is guaranteeing a certain percentage of the loan amount, and a lot of banks won't go into these secondary or tertiary markets. So having the ability for these banks and these different other lending organizations to have a guarantee, they're more willing to lend in these areas to stimulate the economy in these rural areas. So on the next slide here's some examples of some fundings that there could be, for example, $10 million funding in Nevada for a battery recycler. There's hotels, there's entertainment like wedding facilities, parking lots, adventure parks. I mean, there's just a lot of different things, hotels, any type of processing plants and different things. So let's talk about how deal structures might look.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So here's the credit box. Property eligibility, 50,000 or less population. You simply send me the address of the business and I can do a quick search for you and tell you if it's in an eligible area. 97% of the U.S. land area is eligible. We can go 80% LTV for real estate, 60 to 70% loan to value for M&E and FF&E. On equity, we need 10% for existing businesses. For refinances of equity, we need 20% infusion for new businesses. We're looking for a debt service coverage ratio of 1.25. Typically, anybody that has 20% more of the company needs to sign a personal guarantee. Deal structures anywhere typically from 1.5 million to 25 million. It's Wall Street Journal prime rate plus a margin. So right now, rates are in the fives typically, but it depends on, what type of business and if there's real estate involved. Prepayment penalties are between a 5-year to 10-year declining prepayment penalty. Origination fees are 1 to 2%. USDA has a fee of 1.8 to 2.4% of the guaranteed loan amount. And then USDA could have additional annual renewal fee. Sometimes it's built in with the lender, so it's kind of per lender. And so the way we're structured here at Emerge Lending is we work with the top USDA lenders, and based upon what their appetite is. So each of these lenders for USDA has like a different appetite of what they like, what they don't like. I mean, it generally all fits in one box, but some are more aggressive for certain loan types. And so we work with our lending partners and figure out the best avenue to bring your loan request to get it funded. Ineligible uses, we went over this already: churches, golf courses, casinos, strip clubs, hospitality with timeshares, anything residential in nature, homes, apartments. They do have another USDA program, I should say, which is for multifamily, and you can reach out to me if you're interested in a rural tertiary market and you want to see how to get some leverage for construction or to acquire existing multifamily property. So let's move on here. Here's a case study from one of my lending partners. This business had, it was a sand mine. They had a lot of debts, and at the end of the day, we were able to take their existing debts, refinance all of their monthly revolving bills, essentially, and then they went from $110,000 a month in debt in payments to $33,000 a month in payments by refinancing all these debts into one loan. So that's the capabilities of this USDA B&I program. So it has many uses. Screening and underwriting process here. Basically, initial screening, we have a conversation. You reach out to our company or myself. We talk. We get some initial feedback and documents. We do kind of a pre-flight investigation. And then we go into kind of a soft term sheet. So basically, after our initial package that we put together, we send it on to our lending partners. We figure out which lending partner will be the best. They issue a kind of a soft term sheet. And then I should say here that Emerge Lending doesn't underwrite the group. Our lending partners do. They underwrite the loan. They package the loan, and then it actually goes lastly to USDA for a final checkoff and underwrite to make sure everything is ready to go. And then you have your approval from there. These are the items needed. I can send this to you if you're interested. We can obviously, of course, talk beforehand. Just a borrower release form, project address, entity name, PFS on guarantors, ownership structure, business plan, or summary. Obviously, we need to know the total loan proceeds you're looking for, detailed list of use of funds, schedule of debt, accounts receivable on aging report, organizational documents, financial statement, 3-year historical BS, IC or CF, year-to-date financial statements, less than 90 days old, at least 2 years of pro formas. So why Emerge Lending Group? We work with the top 6 lenders in the nation. We have great relationships with them. We figure out where to place your loan, where it's going to go through with the least headache. Our underwriting team internally, we have lots of experience with USDA and SBA, so we can help you kind of figure out what the best options are. It might not be a USDA loan. Maybe a SBA makes more sense. Maybe a SBA 7A, maybe a 504. These loans are assumable. There's high advance rates, and there's long-term amortization, which, can increase your cash flow. And at the end of the day, once this is vetted, it goes, and the yes is a yes, and we can get this thing closed for you quickly. My contact information, you can visit me at emergelending.com and inquire and find all my contact information. My direct number is 925-852-8261 or beau@emergelending.com. And I want to really thank you for taking part in this short educational tutorial on USDA B&I loans. And if you have any questions, please feel free to reach out, and I will do my best to get in there and figure out what options are available. And we have so many different options, and not just USDA, but SBA, as I was saying. We have private funding sources, we have AR, we have asset-based loans, commercial loans of all different sorts. So we really want to be a one-stop shop for you to help you and your business and your real estate perform at the best it can. And lastly, I'll just say that typically this process is a 60, possibly a 90-day process from start to finish to get you approved, assuming you have all your documents. I look forward to connecting with you, and have a great day.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.